Hi Lisa, good afternoon. Welcome. How are we doing? Let me know if you can hear me loud and clear. Great, great, great. Okay, let's see what we've got here today. Let's see. All right. So we have the indices back in its upward trend. So as we can see here, price did a pullback as it's already in its wide states. This is the daily time frame, and it's in its wide states. So as it got here back in February 20, the 12th of February, that's when it got to this high. This is an all-time high, and began to pull back, and then it's now starting to push up again. So talking of the levels, the key levels, so it's gotten to the 18,000 price range. So at this level, the next key level we are targeting is the 18,150 level price range. That's the next key level we anticipate price will get there. If this does not form a double top and turn round, as it is in a wide state already. So what could happen is, as we can see from this red line, I've got a whole lot of lines on my charts. So you can see from here to here, it's quite wide because we are in a strong uptrend. So what could happen is this could be a top and then a downtrend begins. But with that said, we don't know what will happen, if that's what's going to happen. So we will just trade what we see on the charts. we will trade what we see on the charts. So from here as well to where it got to, we can see the space, and then as a result we had this pullback. So this pullback got to this level, and it came to a key level. Let me see what key level it is. So it came to the 17,350 key level, and it started pushing back up again. So from where it is, if it wants to continue going up, all that we do is we trade what we see. So if it wants to continue going up, the next target is the 18,150, which is not far from there at all. And then from the 18,150, the next key level is the 18,350. So this is a quick rundown on the higher time frame, the 1 hour time frame. This is a quick rundown of the higher time frame. A quick rundown of the higher time frame. So we go back on our trading time frame, and then we see what we have there. We'll see what we have there. Yeah. So this is what it's looking like at the moment. We had some nice setup earlier on as price came to this narrow states. It came to this narrow states where we look out for opportunities here for a ride to this level. So looking at this, let's see where exactly which level it got to. So the highest point it got to is the 18,095.3. That's where it got to before it pulls back. So the next target we are looking for is, if it's want to continue going up, the next target we are anticipating it will get there. This is the next key level, the 18,150. That's our anticipation. But nevertheless, we trade what we see. We trade what we see. We trade what we see. We are not making any predictions, or all we are saying is this is how we see things and this is how we trade it. So if price is above the moving average, we look for setups, and I believe if you were looking or watching this pair, you could have gotten into this setup before this move started. It's the same thing that we go through each time we meet, each time we having this meetings. Is the same thing, the same setups, the same event we look at for at these locations. So as we can clearly see, it came into this narrow states. It came to this narrow states. It came to this narrow state, and then from this narrow state it moved to the wide state. So if you got in here and price got to this wide state, this is where you take your profits. You take your profits the moment you can see the last green candle is taken out by the purple candle. You jump out of it. The moment you see the last green candle, the low of the last green candle being taken out by the purple candle, you get out of it. Maybe on your chart it might be red candle, but whichever, you can change it, adapt it to whichever color you prefer. So we do the same thing over and over again. So over here we take in the trade, we look for the best setup we can get on. So it gave us this setup here. It went up, pulled back a little bit to this area. It gave us another setup here where we can see a pin bar forming here. So you seeing a pin bar here, it's a confirmation enough, and then having price taken out by this bull green candle, you jump into this trade here. You jump into the trade here. So you have a ride up, you jump into the trade, your stop loss goes in down here. So the moment this begins to move in your favor, in your direction, what you do straight away is protect your account. You move your stop loss above your entry. So at this point, you would have been in a risk-free trade and then allow the trade to flow. So at this point here, you could have taken your profits because you came into a Y state, taking your profits from here. As it came to the blue line, that is where you take in another position. You take your position near the blue line, not wide away. So when we consider here, from the red line to the blue line is wide. Then again from the blue line to the where price got to, you have another space there. So we have double space. That tells you it's in a wide state. So once it's in wide state, you got in here, you can take your profit here. The moment this last green candle was taken out by the purple candle, you could have jumped out and then re-enter here the moment price took out this last purple candle near the 20 moving average for another ride up. And this is where you could have added to your position. So let me mark where I'm talking about. Could have gotten in here at this level here, then your stop loss down here, your stop loss here. So the moment it gave you, it moved further up over here, it moved further up and then pulled back here. So you could have re-entered here. You could have re-entered here. So your stop loss would have gone down this low, this candle here. Yeah. So your stop loss here. So the moment it moves away from your entry, you move your stop loss up above your entry, making the trade a risk-free trade. So you leave it to run and run until it gets to a wide state. So once it's in a wide state and the last green candle, as you see it here, is taken out by this purple candle, either this one, or if you didn't take it out on this one, you can take it out on this one. So you can see here, this is where you would have taken your profits, closed your trade over here. You close your trade over here. You close your trade over here because it is in a wide state. So in the wide state, you take your profits. And when price come near to the moving average, you enter for another ride, moving with price. So over here, let's do this. Let's do this. Let me just, okay, from here. So price has pulled back below the 20 moving average. It's below the 50 moving average as well, just above the 200. So we're still in the upward trend. So if we want to get into this trade, we'll ideally wait until price gets above the 20. We'll hop on, because we take trades near the 20. So when it gets to the 20, above the 20, and it holds from there, we can take an entry going up. We can take an entry going up. So let me just quickly go back here this morning, what happened? There was something I wanted to show us on this morning's. What time is this? This is 4 a.m. Okay. Yeah, so as I always say, with this, the blue line, which is the 20 moving average, and the yellow line, which is the 50 moving average, whenever they cross, we look out for one thing. We look out for price pulling back to the moving averages again before it continues going where it wants to go. So over here, around 6, okay, this crossover happened around 6:38 this morning. So when this crossover happened, the next thing you expect to see is price pulling to the moving average, which it did, and then continue the downward move. It gave us another pullback. This time it went above the 200, but we should know that it's still, we are just below the 20 moving average, telling us we are in a short-term downward trend. So with that said, you look out to sell. So price pulled back immediately, it went up above the 20 moving average, suddenly pulled back again to the 20 moving average, and then gave us a nice setup, a nice event there for an entry. A nice event here for an entry to the downside. It pulled back to the 17,950 level, which it crossed over yesterday. Price was below 17,950 level yesterday, which I was telling some guys that the next target was 17,950, which it did its job. So we're somewhere here yesterday, price pushed to the next level, and then from there it's aiming to the next key level, which is from the 17,950. The next key level is the 18,150, which price is almost there. So this is the 17,950, which it came back again to test it. It came back to test it again. So from here, if you know, I've taught you about the key level. So if you were trading based on this key level, that price came back to test it, pushed up, then tried again. It couldn't even beat the previous record here. Price couldn't beat the previous record here, and then started pushing up. So from here, if this was fresh in your mind, or you took notice of where it came to, which is the 17,950, you could have gotten into this trade right from here for a ride going up. So this, I believe, is a pullback. It's a pullback to gather some momentum again to push it up, or it could come back to test this area where it stayed there for some time. This happens to be an area as well, but we are talking about the key level. So from this key level, the next key level is 18,150, which it came up, got to the 18,095.3 and pulled back. So all we are looking out for is, as I said, we trade what we see. So as we can see now, price is being held up at this level currently. What's this? No. Undo. Okay. Price is currently being held here at this level, 18,020. So we can see the number of wicks that it's left here. So we'll see how it plays out. If it gets above the 20 moving average, we can look to the upside trading up, but currently it's below the 20. It's pushing down to this the 200 moving average, and as we can see also, price has just crossed below the 50 moving average. The 20 moving average has just crossed below it. So it could be that it's going for a downward push again. So over here, after we've seen this crossover, what we expect to see is price pulling back to the moving average, and at that point, if it wants to go up, it will cross above it, hold, and then push up to go to the next level. If not, we get a setup from here. If it pulls back to the 20 moving average, and then we get a setup for a downward trend, we could hop on and then have a ride down. But currently, that is what we have here. The best opportunity we could have enjoyed was before this live session, when price was at the narrow zone. So it went into the wide states, and then now, as we can see, it's moving to the narrow states. So from the narrow states is where we will look out for a push up again, if it still wants to go up. Hello Trevor, hello Lindy, hello Christine. Good afternoon everyone. Good afternoon. So that is what we have here. So we'll just wait and see how this plays out. If we get a good setup, we will hop on. If not, we will keep on doing the same thing over again and again and again. As I've always said, I want us to know how to fish, so that you wouldn't wait for someone else to teach you or to tell you this is where you need to get in. If you know what you are doing, you do it with understanding. That's why I'm taking my time to go over this over and over again anytime we meet, because as we keep on repeating it, it will get a proper seat in our mind. We will get the understanding, and from there we will do it with understanding. We will do it with understanding. So if you get into a trade and you see the blue moving average cross above the 50 moving average, the yellow line, your anticipation is you expect price to pull back to the blue line or near. Then that is where you look out to hop on when price is near the blue line, or sometimes it can drop below the blue line and falls in between the yellow and the blue line. Is still an upward trend. As I've said before, the blue skinny line we see here is not just that, it's an area or it's a zone. So when it dropped below the blue line, it doesn't mean it has completely changed direction. It's still within the zone. So let's take notice of that. Let's take notice of that. So the same process we go through repeats. We go through it again, we repeat, and then we go through it again. We take the opportunity, we go through the process again. So as we know, we have a test or a requirement that we go through it. So after going through the test, and then you notice that you have 3 out of 2, then it's a pass. If it's 1 out of 3, it's 1 out of 3, no, you can't take that trade. If it's 2 out of 3, you can take it, it's a pass. 2 out of 3, it's a pass. And if you get 3 out of 3, that gives you an ideal situation to get into it. That means the position of price is above, and then price is also near the blue line, and then you have the dominant color being green if it's going up, and then the blue line also pointing up, giving us indication of an upward trend. So when that happens, you have 3 out of 3. And then also at that point you also check if price, if the two moving averages, the blue line and the yellow line, they have crossed over. So at that point in time, if it's in a narrow state, if they have crossed over, the next thing I expect you to look out for is a pullback to the moving averages, either near to the 20 moving average or just below it or near to it, and then you look out for a setup to ride with it, to ride with it, to ride with it. So talking of where to take your profit as well. So once you get into the trade, for instance, if you get into the trade at this level, or if you got into it from this key level, your aim is to look for the next key level, or if you don't want to go that far, you can look for the next recent high. So the next recent high, this, if you got in somewhere here, this could be your first take profit. This area could be your first take profits. Or if you are going for the from one key level to the next key level, this could be your second take profit, as it is the recent high. And then from here, the next key level is 18,150. 18,150. So from this key level 17,950, this is our next target. So currently price is on a pullback. So if anything at all, as we anticipated, I think we missed out on this because I'm doing a talking. So I said if price pull back after this crossover, we expect price to pull back to the moving average, and that is what it just did. So we could have gotten in here. So I'm showing you the things that we do. So if you see this, maybe you spot it, I don't have to point it out to you. You should know. So anyway, this would be a counter trend anyway. So this being a counter trend, it's a little bit on the dangerous side. Let's hold on, guys. Sorry guys, yeah, so with that said, this pullback, if you wanted to take a quick in and out, you could jump in here, your stop loss goes above here. But this being a counter trend, we are in an uptrend, so that's why I say we just avoid these trades and look for these long runs. So from here, as we know, price is aiming to the narrow state. So once it comes to the narrow state, it gives us a good setup. We jump onto it for a nice ride up if it wants to go there, which we don't know. All we know is we trade what we see on the charts. We trade what we see on the chart. We are not trading our mind. We are not trading our inner markets. We are trading what we see on the charts. So sometimes we look out for some of these this, we do this analysis that price moves from one key level to the next level, and we allow ourselves, our minds, to take over everything after seeing that, then all our attention will be, all our trades will be in line with what we have perceived in our minds. But we have to stay away from that. We get the understanding, all right, we build that picture on the screen, but we come back to the basis to trade what we see. We go through the process and we trade what we see. So currently, price came from a narrow state to a wide state, now coming back to a narrow state. So from the narrow state, if we see a nice setup there, if we see a setup from the narrow state, then we take it and ride with it as it moves to the wide state again. So from here, our anticipation is, if price, this is from the narrow state to the from the wide state to the narrow state. So from here we expect something like this. Price come back and then continue to the next key level. So from the next key level, if it wants to continue, this is what could happen. If it wants to continue the uptrend, that's what could happen. So as we say, we ride with the trend. We don't ride against it. We ride with the trend. We ride with the trend. We ride with the trend. So that's what NAS is doing currently. Let's have a look at US 30. Yeah, so 2 minutes US 30. Also the same thing we talk about. It came into this narrow state, as we can see, where we can see price, 20 moving average, 50 moving average, 200 moving average, all in the same area, all in the same location. Let's move this off. Yeah, so we have price in this narrow state here. In this narrow state here. So from this point on, the moment you see the purple candle being taken out by a green candle, you have an opportunity to ride with it to the upside. So if you didn't get in somewhere here, as we can see, price is above the 200 moving average. The 20 moving average is above the 200 moving average. And then we can see that the 50 is also above, which gives us a high probability of its trajectory, where it's going. So we can see that it's an uptrend. So if you didn't get in somewhere here, it gave us another opportunity here where it took out, price took out this. Let me take this off. So where is this? Yeah, this one. Okay. So this is the candle that took out the last purple candle here. So you could have hopped in here. Another entry from here gave us another entry here to add on to your position. So once you get in here, the next place to put your stop loss is below that candle. It's below that candle. So currently, what state, if you can put in the chat, what state is US 30 in at the moment? Let's put in the chats. Let's see if we are following. What state is US 30 in at the moment? Let's see if we are following. What state is US 30 in at the moment? Wide states. That's great. That's great. So we are following. That's great. Great. So, as I always say, we do this with understanding. So once you do it with understanding, it builds up your confidence level as well. Because you'll be doing things. If, for instance, if price is near the 20 moving average, and then if you get into a trade somewhere here, if you put in a buy trade here, your stop loss below here. Price never came back to kick you out. Price never came back to kick you out. You would have been in the trade. So as price moved above your entry, all you could have done was pick your stop loss and place it above your entry, making your trade a risk-free trade. So where you added on to your trade as well, you pick your stop loss, place it above your entry. It went up all the way here and then of course pulled back. This pulled back, I guess, would have kicked you out of the trade. But if you kept this one here, I think you have been fine. So whichever happened or whatever happened at that point, you could have re-entered here. You could have re-entered here. This is what we call trading. So sometimes you get taken out, you look for the next opportunity. It is still in an upward trend, and as price is near the 20 moving average, you could add on to your position. It is near the 20 moving average, so you can add on to your position. Another place to add on, price is still near the 20 moving average. You add on here. You add on. So another question, when we see this blue line crossing above the 50 moving average, what do we expect to happen? Another question, when we see this blue line crossing above the yellow 50 moving average, what do we expect to see? Yeah, Lisa said pullback, exactly. So that is exactly what we had here. After this crossover, blue line crossing above the yellow line, we had a pullback. So when you were in this trade, or when you were here, you've gotten into this trade already, and then the market opened and price was doing this up and down. I want you to have the understanding from this point that based on this crossover, this pullback is as a result of this crossover we had earlier on. So see what happened. Price pulled back to this moving average and then continued from there. So if you have this understanding, all this happening, you kind of understand why that is happening. You are not confused at all. You have the understanding. You are doing it with understanding that this is happening as a result of this crossover. So once it's finished doing whatever testing it came to do near the blue line, and then you see a setup here, price taking out the last purple candle, you have the confidence to enter for a ride going up. Guys, that's why I always say let's do this with understanding. What price is doing on the charts there, price always give us this kind of pattern over and over again. So I want us to come to that level of understanding that when something is happening on the screen, go with it, move with it, flow with it, understand why that is happening. Apart from situations where we have news items coming in to cause any kind of unusual movements, but if price is on its normal flow of things, this is what we expect. And when it is happening, let's do it with that understanding that after a crossover, we expect price to pull back. And when price pulls back to the blue line, we look out for an event there to ride with it, to go wherever, if it's in an uptrend or a downtrend, to ride with it, to go with it. Yeah, so that's why we have to trade with the 20 moving average. We don't trade against it. You are more safer to trade with the 20 moving average. Right. So currently, as we see, US 30 is just holding at that wide state. If we consider the space between the 200 and the blue line, and again from the blue line to where the high of this current price got here and then got to this Y state and pulled back to the moving average. So currently it's doing this. So if we get a proper setup from here, we could hop on. But as again, we are looking for buys. We are not looking for counter trade, as it could be dangerous. Let's go back to NAS. Yeah, so NAS is still pushing down. So what we said is, if it wants to continue going up, if it closes above the 20 and holds there and gives us a better event or setup there, we go with it going up. But if not, there's a high chance that this is the previous key level it broke. So if price does not hold at this level, it could come all the way to retest this area. And then if it wants to return back to continue the uptrend from here, we could look for an opportunity going up. Yeah, so it looks like this level of support area happens to be a little bit strong, so it is leaving this wicks or this pin bar here. So if we kind of have these pin bars and then we expect price to move above the 20 moving average and close above it, then we could enjoy a move up. At the same time, we can see the blue moving average heading towards where the 200 is, which might end up creating a narrow state. It's already almost in a narrow state anyway, because this is almost close. Price is here, so we have all the three together. So we'll see what happens. As I said, the best area we could have enjoyed is, which happened before this live session, was here. And again, I said, us being on this live session is not just coming to look for some trades, and I want us to know how to fish ourselves, how to do this ourselves. So whenever you get behind your computer to trade, you can spot out what you are looking for, the specific things you are looking out for to trade. You want you to be independent, but not depending on anyone to trade. Yes, of course, you can share ideas with one another, but the basic thing I want us all to have is to be independent traders, where we know exactly what we are looking out for, and then trade at the right times as well. Then the profits will come in following the process that we go through each time. Do we have any question? Any question, you can pop it in the chats. So as I've also mentioned before, price NAS or the indices, they kind of moved, give some nice moves later on in the day as well. So once we hop off this live session, maybe from 5 onwards, 6, 7, 8, from that time, it's for some reason it happens to have some nice moves. Sometimes I will say price waits when everybody is signed off, getting ready for bed. That's where it's tries its moves and then moves nicely from that time onwards. So we can always look out for these times of movements when price is moving nicely during those times, and then in the morning as well. In the morning as well. So guys, if we are consistently following the process, we shouldn't be nervous at all whenever we take a trade, because I expect all of us to put in the right lot size and also put in the the maximum loss per trade. Let me just go over this maximum loss per trade. Let's, for instance, you've calculated based on your account size, you've calculated and then you've noticed the maximum loss per trade on your account is, let's say, £20. So that is the maximum loss per trade you have identified, £20. Just hold on, guys. Alright, so as I was saying, if your maximum loss per trade is £20, and let's say you get into a trade here, as price takes out this last purple candle here, so you hop onto this trade going up, I expect to put your stop loss here. So out of that £20, let's say from this, your entry level to where your stop loss is let's say £15. So you are still within your maximum loss per trade amount. You don't have to put the whole amount in. You only put the whole amount in a situation where you think you leaving it here might be too close that you could easily be kicked out. Then you use your maximum loss per trade on that instance. But if what you have at that point in time, if you can reduce it, then you just reduce it there to £15 instead of leaving it at £20. So the moment price moves, gives you some enough room, moves up, you can move your stop loss above your entry. So this is another area of adding on to your trade. You could add on to your trade here. You could add on to the trade here. Yeah, I hope that is clear. That is clear. So with your take profits, that's what I was explaining earlier. You look left and then you spot the previous high which was created by price. So this is the previous high here. You could take some profits off. Maybe if you took 2 trades, you could take one out. You can close one trade at this level As we can see, when price got there, it kind of pulled back a bit. So on its pullback, it came near to the 20 moving average. You could have re-entered a position here going up. So the reason why you take out is because at this point in time, price was in the Y state. So as I said, in the Y state, you take profits. You only add on when price is near the moving average, then you take going up. In the Y state, you take your profits. Any questions, ladies and gents? Any questions at all? So as it stands, we're still anticipating that price will follow this kind of move up. So on all this is doing, we believe it's testing this area, because this is an area, this is the same area where this move started. So price has come back to test it again. So it could move from here back to up to make some new highs, because currently this is the all-time high as we have it. Let me see on the left. Yeah, I think this is the all-time high that we have currently. If we go on the daily, I don't think there is any high points after this. So this is the daily chart, and this happens to be the all-time high that NAS have been on with the amount of data we have here. Let me change it to weekly. So this is the data we have beginning from here back in 2003. So this, as we have here, is the all-time high. So whether as price will continue making new highs, we don't know. So all we do is to follow price. As it moves higher, we follow it and then we ride with it. So as we can see, price back in 2003, it came from a narrow state into a wide state and pulled back to the narrow state and then begin its move again to the wide state. So it is in a wide state now. There could be another pullback, or it could push up to make more new highs before it pulls back to the narrow state, then continuing again. Guys, this is what we have to follow. This is the process we have to follow each time. Each time you sit on your charts, identify which state is price in. If you identify which state it is in, if it's in a narrow state, you look out for a buy or a sell. If it's in a narrow state, price is below the 200, price is below the 20 moving average, the 50 moving average is below the 200 moving average, you look out for a sell. If all of them is above the 200 moving average, you look for a buy going up, just as we are seeing here today. So this is a weekly time frame, as we see here. So the same setup, the same strategy we are talking about, even on the weekly, where we could build wealth using the same strategy. When price was in this narrow state, the same thing that we are talking about, we look out for a setup here. So just imagine we got into this trade as the green candle took out the last purple candle. We hop onto this trade at this level. See what just happened at this level. So all these years, price never came back to this low again. So all these years, you could have been riding on this up move. Just imagine how much this would have made you amount of money this could have made you. It's the same thing. It doesn't matter which time frame, which symbol you are trading on. So even at that, after entering here, it gave us a lot of opportunities to add on to the positions. Each time price is near the 20 moving average, it is time to add on. It is time to add on. See, this is weekly time frame. So each candlestick took a whole week to print. So this big one we have here took a whole week to print. This tiny one we have here took a whole week. So these are a lot of pips way back from 2003. This strategy still functions like magic, as simple as that. As I say, it is simple but powerful. Simple but powerful. All that you need to trade this is all you see here. This is all you see here. Are we catching the fire? Is it making sense, guys? Is it making sense? Is it making sense? Okay, let's go to US 30. US 30. I can see someone put on the chat US 30. What is happening there? So the same way, this is US 30 as well, which the data I have on here started from 2004. And then since then, it's been an uprise. And it's still pushing up. US 30 is pushing up. Let's go back to 2 minutes, our trading time frame. Oh, okay. So, US 30 pulled back into this area. And then from here it's pushing up. So from what I'm seeing here, as this still happens to be in the same upward trend, in the same zone. So when price took out this, if you are a little bit risk averse, you could have hopped on to this here. Your stop loss goes below here. Your stop loss goes below here. So now, where it is now, what we look out for is a second chance. Price closing above the 20 moving average and being taken out by a green candle, we take in the trade. Yes. Yeah. So we have the purple candle closed above the blue line. So if we have a green candle taking this purple candle out, then at least we have a confirmation of our strategy. So currently it's pushing down again, but all that we are looking for is price staying above the 20 moving average, and then we get a setup there. So as I've explained before, this testing that price is doing in between the two moving averages, price is currently being held above the 50 moving average and below the 20 moving average. When you see this, don't just assume price has turned around, having a downward trend. So long as price is held within these two moving averages, the uptrend still persists. So with this, what we are seeing here, if we go on the 5-minute time frame, you will notice that price is just touching on the blue line on the 5-minute time frame, or it's just near. So I'll just hop on to the 5-minute time frame, and then we'll see what is happening there. Yes, so this is the 5-minute time frame. On the 2 minutes, it's below the 20 moving average and above the 50 moving average. So what I've said is, if you have a situation like this, don't be confused. If you're on the 2 minutes, just hop on to the 5 minutes and see where price is. So if you see this, you know that the uptrend is still in play. It's still in play. So price has currently pushing below where it came before, as we can see here. Currently pushing below. So what we all know is, we can all identify that it is in the wide state, and so long as it is in the wide state, price will pull back to come back into the narrow state. So that is what it is doing here. That's what it's doing here. NAS took the lead. NAS took the lead to come to the narrow states. Yep. So as I said before, we trade what we see. As we can see, it pushed down below the previous key level. It has pushed down below the previous key level. So if it's something that it wants to go up again, we'll follow you through. Or if it's want to continue going down, we'll find a setup as this cross below. If price this cross below the 50, the 20 cross below the 50, we expect price to pull back. Once we have that pullback, we can hop on for a downtrend, a downward move. But still, it is very much in the upward trend. It's very much in the upward trend, but then currently it's pulling back. It's pulling back. So just as we don't want to be caught up, it's an upward trend. So what we tend to look out for is to follow price. As I said earlier on, going back on is it the daily? Yeah, as I said earlier on, let me take this off. As I said earlier on, this could be forming a double top here, where it creates an M pattern. So this was the first move where it came down and then came back to test here. So it could be an M pattern to move back to the narrow zone or the narrow state. I hope it is clear. Let me take off this. I try to draw, anytime I try to draw, it brings back all my key levels. So as we can see, let me change it to line chart. So as we can see, you can see it's kind of even formed an M here, pulled back. So this is I will take all this as one. So price has come to test this previous high, gone a little bit above it, but so we take it as this is the second retest. So on here, it could happen that it will drop from here back to the narrow zone, the narrow states, before it will turn around to go up for another upward trend. So currently we are at this level, so we don't know what will happen yet. So long as price is doing this, we will just be a little bit cautious and see what we can pick out from it. What we could pick out from it. as we can see here, from this point on, it was a nice move that it kind of taking all the pips that it gave from this point on to this point. It's kind of taking it all back with this move down. Yeah, but again, we want to ride with the trend. We don't want to ride against it. Talking of the 20 moving average, at this point we could, if depending on how you want your risk tolerance is, you could ride it down. As it's always from the wide state, it comes back to the narrow state, mostly to the red line. So from here we could have, depending on your risk tolerance, you could have taken a trade as price dropped below the 20 moving average and gave a setup here. Could have got onto it back to the narrow state. But again, if you don't want any nervous states or where you will be feeling uncomfortable, you just wait. As it is ready to move up again, you just ride with it, as that is what the big players are doing. If the big players are riding it up, we join them to ride it up. That is the main reason why you have to follow the trend. You have to follow the trend. You want to do what the big players are doing. Any questions? Any questions? Yeah, looking at it, it's a nice sell that just happened here. But again, as I've explained, we know exactly what we are looking out for. So if you wanted to catch this in and out trade, this is where the entry could have been, as price took out this last green candle. Your stop loss goes above here. Yeah, your stop loss goes above there. So in this kind of trades, you could just probably go in with a small amount, or go in with whichever amount you think is comfortable for you. So this is the risk you would have taken. Guys, if your money is sitting on the side, you can't make money with it. You can only make money when you put it into the market. So if you calculate and then you find that price is in the wide state, and we know that from the wide state it comes back to the narrow state, and then you see this setup, you calculate and you find that the risks you are putting in from here to here, if it's 50 pounds, from here to here, if it's 100 pounds, 200 pounds, depending on how much you want to put in as the risks, and you want to take this trade, nothing stops you. Nothing stops you. But again, sometimes it might not give you this long run. If the trend is very powerful or strong, it might just give you about 25% retracement, and then it will begin to move back up. So here we can see the retracement from this initial move is almost 120%. It's gone below where it started from. It's gone below where it started from. So all that you are doing is you're following the 20 moving average. Price is below the 20 moving average. You can take it if you want. If not, you just wait when it's done all this movement and it's going up. You join it. So over here we have the 20 crossing below the 50 moving average. So if you weren't sure about this, you could have hopped on as this retest came in, as price came back to the 20 moving average for a run, then you could have been in it. So we have to be very fluid in terms of taking our trades on, especially on the smaller time frame, as we do have mostly some kind of moves like this. On a higher time frame, it will be like a small move. Okay, guys. If there are no questions, I think we'll kind of end this session here. We've spent an hour, almost an hour and 15 minutes. Today is Friday, so let's go and have a very good evening. A very good evening. Alright guys, thank you very much. Thank you all. I think we'll end it here. It's 4:15. So hopefully meet again on Monday to see what we can find and what we can spot on the charts. So as I said, my aim is to teach us how to fish, how to spot our own trades. I'm not overly concerned about calling out trades as we do this live. Yes, if I find a better one, we can all hop on. Anyway, with that said, thank you very much and see you next time. Thank you.